This is Beyond Meat on the weekly chart. And what you can see is that this past week, the weekly candle closed above the weekly sellers level at $9.70. And what the charts are suggesting is that the bottoms are in. Yes, because of the breach and close above the weekly sellers level at $9.70. Now, before we continue with the analysis, let's look at this article so we can get some clues to support whether the lows are in or not. All right, so this article is coming from The Motley Fool. Where will Beyond Meat stock be in 5 years? So it was a Wall Street favorite not too long ago, reaching a peak stock price in 2019, shortly after it went public. The shares are down now 96% below that high water mark. The problems here are many, and it seems increasingly likely that this food maker won't be around, at least as it exists today. Now, meat alternatives were popular when Beyond Meat went public. Beyond Meat itself was a huge factor in that trend, as it had introduced a product that is supposed to closely mimic meat. Restaurant chains were trying to jump on the alternative meat bandwagon, introducing menu items featuring Beyond Meat's offerings and helping to spread the hype. We saw Beyond Meat being sold in McDonald's, and my family and I were also on the bandwagon as well back in the days. The problem is that there's no real barrier to entry in the meat alternative space. Now, shortly after Beyond Meat got into the market and their stock soared, you had others come into the market as well. A lot of the other competitors quickly scrambled in, plus there was a host of existing products that upstart Beyond Meat had to compete with, such as Kilnover's, Morningstar Farms brand, and even food basics like tofu. The hype around Beyond Meat didn't last with investors, and it hasn't lasted with consumers either. The food maker's trailing 12-month revenue peaked in 2022 and has been falling for about a year. And as you can see, as they continue to raise money, the orange line shows how the EPS has been diluted. Then there's the roughly $1.1 billion in convertible debt the company is carrying on its balance sheet. To be fair, the convertible has a zero coupon, so there's no immediate risk. However, it comes due in 2027, and at this point, it looks like money-losing Beyond Meat could have a hard time rolling it over or paying it off. When that note comes due, or perhaps sooner, something will have to give. If the company doesn't turn profitable in time, there is a real risk that it could end up going out of business. Indeed, it is not at all unusual for unprofitable companies with falling sales and heavy debt load to go bankrupt. That doesn't mean the product would go away, though it could, but investors would likely be wiped out in this scenario. A third and probably more likely outcome is that Beyond Meat sells itself to a larger consumable staples company. The list of options here is huge, including Kilnover, Tyson Foods, Hormel, among others. In fact, with sales of roughly $75 million in the third quarter, Beyond Meat would be a rounding error at an industrial giant like Hormel, which had revenue of $3.2 billion in its most recent quarter. Looking at Beyond in the best of lights, it is a turnaround stock. That's an investing approach that most investors should probably avoid. And while there's a real chance that the company gets bought by a larger food maker, that's not a particularly good reason to buy the stock. Indeed, it may not get acquired, and then you have to contend with the risk that its debt load pushes it into financial brink. All right, so kind of going back to the charts, I'm going to zoom out to the monthly chart, and if this is really a true bottom, we have about 10 days left in this candle, December candle. What we really need to see is a close above $11. ideally $12 because you have some wicks on the downside of these candles, which will support, now should be resistance. Again, scrolling back down to the weekly chart. This was a level of interest for sellers. This is a level of interest for the sellers. But if you get a monthly candle close above $12, that would be confirmation that the bottom is in. You can see a surge in the last couple of weeks in volume, including even a gap higher. So the chart suggests the bottom is in. Going to the daily chart, closing above the $12 level on the monthly chart would also include a close above the 200-day moving average. Anything below it, you're in a secular bear market. Anything above it, you're in a secular bull market. You can see your 13 and 26-day moving average is moving up. You have a crossover. Both are crossing over the 50-day moving average. Price is above the 100-day moving average. RSI is moving higher. So it is safe to say that the bottoms are in. However, Beyond Meat still remains a risky bet. Thanks for watching. Subscribe. Please like the video.